Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 164, recorded here on April 27th, 2025. This podcast is for entertainment only, is not investing advice. As always, please do your own homework. We are at block height 894,197, Moscow time 1065. Fees are 3, 3, and 4. We will kick it off with the market news update, outlook, and then get into the weekly top Bitcoin news. Lots of interesting stuff. We'll check out this week's featured post on the Bitcoin Fortress Substack, take a look at what's coming up on Bitcoin Fortress Substack. We'll do shout outs this week and wrap it up. So with that, let's get into it. Wall Street powered to its second best weekly advance of 2025 on Friday, with the benchmark S&P 500 jumping nearly 5%. After wobbling on Monday, markets staged a four-day rally as sentiment was boosted by U.S. President Donald Trump significantly dialing back his aggressive rhetoric against Federal Reserve Chair Jerome Powell and China. The first quarter earnings season took some of the spotlight away from tariffs. Market participants digested results from some of the world's biggest companies, including a 71% plunge in quarterly net income by Tesla, a solid performance from Google parent Alphabet, a better than feared quarterly loss from troubled plane maker Boeing, and a dismal quarter from beleaguered chip maker Intel. For the week, the S&P 500 advanced 4.6%, while the tech-heavy Nasdaq Composite jumped 6.7%. The blue chip Dow climbed 2.5%. Looking ahead, Wall Street is in for a massively busy week in terms of quarterly earnings and economic data. Hundreds of companies will be announcing their results, including household names led by four members of the Magnificent Seven: Apple, Microsoft, Meta Platforms, and Amazon. Traders will also be keeping a close eye on the U.S. Bureau of Labor Statistics advance estimate of Q1 GDP growth on Wednesday. President Donald Trump's sweeping trade war has led to widespread revisions in economic growth expectations, and the advance estimate will give an idea of just how much. On the same day, the core personal consumption expenditures price index, widely seen as the Federal Reserve's preferred inflation gauge for March, will be published. Tariffs will continue to garner attention, with market participants keeping a close eye on any developments. All right, let's jump into the Bitcoin news. First up here is Good Morning Bitcoin from Saturday, April 26th from No BS Bitcoin. Take a quick spin through the headlines. Spiral renews support for Dan Gould and Joshi-san. The organization has renewed support for Dan Gould, who is developing the PayJoin dev kit, and Joshi-san, a Fedimint developer focused on simplifying federations. Metaplanet buys another 145 Bitcoin. The Tokyo-listed company has purchased an additional 145 Bitcoin for $13.6 million. Their total Bitcoin holdings now stand at 5,000 coins, worth around $428.1 million. Semler Scientific has increased its Bitcoin holdings to 3,303 Bitcoin. The company acquired an additional 111 Bitcoin at an average price of $90,124. The purchase was funded through proceeds from an at-the-market offering and cash reserves, as stated in a press release. So corporations keep stacking the sats. The Virtual Asset Service Providers Bill 2025, introduced in Kenya. The new legislation aims to establish a comprehensive legal framework for licensing, regulating, and supervising virtual asset service providers, with strict penalties for non-compliant entities. Russian government to launch a cryptocurrency exchange. The country's Ministry of Finance and central bank announced plans to establish a trading platform for highly qualified investors that will legalize crypto assets and bring crypto operations out of the shadows. And of course, under the watchful thumb of the government. All virtual asset service providers expect to be fully compliant with the travel rule by the end of 2025. A survey by financial surveillance specialist Notabene reveals that 90% of virtual asset service providers expect full travel rule compliance by mid 2025, with all aiming for compliance by year end. The survey also shows a significant rise in VASPs blocking withdrawals until beneficiary information is confirmed, including from 2.9% in 2024 to 15.4% now. Additionally, about 20% of VASPs return deposits if originator data is missing. So they all want to know the PII, who's getting it, who's sending it. UN claims Bitcoin mining is a powerful tool for money laundering. The Rages analysis suggests that the recent United Nations Office on Drugs and Crime report on crime in Southeast Asia makes little sense and hints at the potential introduction of anti-money laundering measures at the mining level. Hmm, don't like that. Riot Platforms has obtained a $100 million credit facility from Coinbase Credit, using Bitcoin as collateral for short-term funding to support its expansion. The firm's CEO, Jason Les, stated that this facility is crucial for diversifying financing sources and driving long-term stockholder value through strategic growth initiatives. Bitdeer raises $179 million in loans and equity amid Bitcoin chip push. The Miner Mag reports that Bitdeer entered into a loan agreement with its affiliate Matrixport for up to $200 million in April, as disclosed in its annual report filed on Monday. Federal Reserve retracts guidance discouraging banks from engaging in crypto. We'll go into that in a little bit more detail later, but the U.S. Federal Reserve withdrew guidance that discouraged banks from crypto and stablecoin activities, as announced by its Board of Governors on Thursday. This includes rescinding a 2022 supervisory letter requiring prior notification of crypto activities and 2023 stablecoin requirements. As a result, the board will no longer expect banks to provide notification and will instead monitor banks' crypto asset activities through the normal supervisory process, reads the Fed statement. UAE-based Islamic bank Ruya launches Sharia-compliant Bitcoin investing. The bank has become the world's first Islamic bank to provide direct access to virtual asset investments, including Bitcoin, via its mobile app, per Bitcoin Magazine. U.S. crypto scam losses amounted to $9.3 billion in 2024. The Federal Bureau of Investigation has reported $9.3 billion losses in cryptocurrency-related scams in 2024, noting a troubling trend of scams targeting older Americans, which accounted for over 2.8 billion of those losses. And there's a little table in here with the trends. I guess there were call center scams. There were 53,369 complaints, 1.9 billion in losses. FBI warns of scammers impersonating cryptocurrency exchanges, increase in tech support scams targeting older adults and directing victims to send cash. Another one is emergency scams, 357 complaints, 2.7 million in losses. FBI warns of scammers targeting senior citizens and grandparent scams. Telephone scam alleging a relative is in a financial or legal crisis. Toll scams, 59,271 complaints, $129,624 in losses. Smishing scam regarding debt for road toll services. And finally, gold courier scams, 525 complaints, $219 million in losses. Scammers use couriers to retrieve cash and precious metals. We'll get into this one also in a little bit more detail, but North Korean hackers established fake companies to target crypto developers. Silent Push researchers reported that hackers linked to the Lazarus Group created three shell companies, two of which are based in the US, with the objective of spreading malware through deceptive job interview scams aimed at individuals seeking jobs in cryptocurrency companies. Boy, you got to really watch out nowadays. Citria deployed its Clementine bridge on the Bitcoin testnet. The bridge utilizes the BitVM2 programming language to inherit validity from Bitcoin, allegedly providing the safest and most trust minimized way to use Bitcoin in decentralized finance. Hesperides University offers a master's degree in Bitcoin. Bitcoin Magazine reports the launch of the first ever Spanish language master's program dedicated exclusively to Bitcoin. Starting April 28th, 2025, this fully online program will equip professionals with technical, economic, legal, and philosophical goals to excel in the Bitcoin era. That's pretty awesome. Bitcoin in DC event is set to take place on September 30th through October 1st in Washington, DC. You can learn more about this initiative here. There's a link. And of course, I'll put that in the show notes along with all the other articles I review. Moving on, we have the Hodler's Digest for April 20th through 26th. So let's see what's in here. We'll skip over the shitcoinery unless it's funny. New SEC chair will be good for Bitcoin, according to Michael Saylor. Michael Saylor, the CEO of top corporate Bitcoin holder Strategy, formerly MicroStrategy, expressed support for the new U.S. Securities and Exchange Commission SEC chair Paul Akins. In an April 23rd X post, Saylor wrote that SEC Chairman Paul Akins will be good for Bitcoin. The statement follows Akins swearing in as the 34th chairman of the SEC on April 21st. Blue Masalari, head of digital assets at investment firm T. Rowe Price, also commented on Akins in a recent Bloomberg interview. She seemed hopeful and recognized a change in how the SEC has acted under the new administration, particularly with crypto-related information, including close to 6 or 7 roundtables with industry professionals. Trump meme coin team denies 300K dinner requirement rumors. That's all we need to know about that one. Serbia's Prince Philip says Bitcoin is being stifled, expects a huge rally. Bitcoin's price trajectory may be suppressed ahead of its upcoming Omega Candle rally, according to Prince Philip. I'm going to say this wrong. Karađorđević, the hereditary prince of Serbia and Yugoslavia. He's also a huge Bitcoiner. In an April 24th interview with Simply Bitcoin, Philip said that some market participants may be limiting Bitcoin price action. People are able to control the market to some extent, he said. Maybe that's what acted on in the 2021 market that suppressed its price from jumping high up. We could get that again in 2025, but there will be one point where Bitcoin price will run away. Philip added that Bitcoin remains a fundamentally deflationary asset and said its value is always going to rise over time. Sam SBF Bankman-Fried, the disgraced co-founder of collapsed cryptocurrency exchange FTX, has been moved to a low-security U.S. federal correctional institution. Bankman-Fried was moved to the low-security Terminal Island Federal Correctional Institution. Previously, he was located at the Victorville Medium Security Facility, a notoriously violent place, according to prison consultant firm Elizabeth Franklin Best. Samuel Goldfaden, a partner at the crypto-centric law firm DLT Law, told Cointelegraph that while his previous facility was violent, Bankman-Fried had been held in a safer part of the facility. Riot Platforms has used its massive Bitcoin stockpile as collateral to secure a $100 million credit facility from Coinbase as the cryptocurrency miner eyes continued expansion. I think we just went over this. See if there's anything new here. Oh, the credit line is scheduled to mature in 1 year's time, but could be extended for an additional year. The loan carries an annual interest payment of at least 9% based on the current upper limit of the federal funds rate plus 4.5%. So SOFR plus 4.5. Let's see, anything else here? Bitcoin headed into key resistance after the April 25th Wall Street Open as doubts over the BTC price breakout persisted. Keith Allen, co-founder of trading resource material indicators, doubted whether Bitcoin US dollar could sustain a trip above 95,000. Allen noted declining volume as price moved higher, repeated wicks below the yearly open, and down signal on one of material indicators proprietary trading tools. For me, a pump above 95K would invalidate the new signal, but I'd probably consider such a move to be a short squeeze unless we have catalyst with some substance behind it, he summarized. And all I can say to that is stay humble. Stack sats. We already heard about the North Korean hackers setting up three shell companies. We'll dive into that one a little bit more later. DeFi platform Kilo X to compensate users impacted by a $7.5 million hack. Ouch. U.S. federal prosecutors have asked a district judge to sentence Abraham Avi Eisenberg, the crypto user convicted of the $110 million exploit of the decentralized exchange Mango Markets in 2022, to at least 6.5 years behind bars. Ahead of Eisenberg's May 1st sentencing hearing, U.S. prosecutors are petitioning U.S. District Judge Arun Subramanian for Eisenberg to face between 78 and 97 months in prison, according to an April 22nd filing in the New York District Court. Prosecutors argue that it's an appropriate sentence for Eisenberg's April 2024 conviction for committing wire fraud, commodities fraud, and commodities manipulation in connection with the Mango Markets exploit, and separate charges that he possessed child pornography. This sentence is necessary to, among other things, appropriately reflect the gravity of the defendant's crimes, promote respect for the law, deter the defendant from future criminal activity, and protect the public, the prosecutors said. And that pretty much wraps up the Hodler's Digest. So let's take a look at CoinDesk's weekly recap, see what's new and interesting in here. After several weeks on a plateau, Bitcoin saw some action this week, climbing to more than 95,000 at press time. It was up 12% on the work week, buoyed by better macro news and a feeling that the worst of tariff mania may be over. That I think outperformed the indexes too. How about that? The CoinDesk 20, which tracks about 80% of crypto market cap, jumped 10% plus in the last 5 days. In an interview with CoinDesk's Sam Reynolds, Coinbase Institutional's John DiAgostino attributed the rally to institutions and sovereign wealth funds accumulating Bitcoin. Retail traders, by contrast, were tending to exit Bitcoin ETFs, he said. Yep. Sell low, buy high. Yeah. Institutions continued to back Bitcoin accumulation vehicles. On Wednesday, Strike CEO Jack Mallers and Cantor Fitzgerald's Brandon Lutnick unveiled 21 Capital, a new Bitcoin investment company backed by Tether, Bitfinex, and SoftBank. 21 will have the third largest Bitcoin corporate treasury with 42,000 Bitcoin, Reynolds and Francisco Rodriguez reported. There was increasing evidence from the options markets that traders are willing to hold Bitcoin through market swings, which explains why Bitcoin held relatively steady when stocks and bonds were diving in recent weeks. CoinDesk market wizard Omkar Godbol reported on that. Bitcoin became the fifth most valuable of all financial assets this week, surpassing Google's market cap for the first time. Not bad for a protocol that started as a hobby among cypherpunks 20 years ago. In other news, Zora's much hyped token launch sagged a little on debut. Analysts said traders were weary of so called VC tokens with relatively little liquidity. The Zora launch highlights a recurring issue in Web3, overpromising and underdelivering. Min Jung, a research analyst at Presto, told markets reporter Shaurya Malwa. Ouch. And of course, that's shitcoinery for you. But rising prices for core crypto assets is opening space for expansive Web3 ideas. This week, the hit British TV series Peaky Blinders launched a blockchain-based video game and Web3 ecosystem, for instance. And in a shift from a year ago, we saw plenty of other gaming and cultural crypto news announcements. Still, if you had to pick two winners in the current market, you'd have to go for Bitcoin and stable coins. There are going to be hundreds of them soon. This week, USDC issuer Circle announced a new global payments and remittances network, Ian Allison reported. And Coinbase free conversion between US dollars and PayPal's PYUSD stablecoin. You can't go really too far wrong, though it's not investment advice, accumulating Bitcoin and paying in stables. Wow, I couldn't agree with that more. All right, next up from Bitcoin.com news, Arthur Hayes, very bullish after calling Bitcoin bottom amid tariff turmoil. Arthur Hayes, co-founder of crypto exchange BitMEX and current principal at crypto investment firm Maelstrom, offered a sweeping macroeconomic critique on April 23rd, likening President Trump's aggressive trade policies to a reckless maneuver on a dangerous mountain slope. Hayes drew parallels between avalanche forecasting and financial market risk. I characterize this chain of events as a policymaker pivot from everything is fine to everything is fucked. We must go something. We must do something. Markets surged and most importantly, Bitcoin bottomed, he continued. I'm calling the local bottom at 74,500. The essay centers around the market chaos triggered by Trump's tariff announcement, which Hayes said elevated U.S. bond market volatility to crisis levels, forcing a swift reversal. In response, U.S. Treasury Secretary Scott Bessent announced a bond buyback program, a move Hayes interprets as a stealth monetary easing. With this context, Hayes emphasized the bullish implications for digital assets. Using this information, we as Bitcoin hodlers and crypto degen investors know that the bottom is in because the next time Trump ramps up the tariff rhetoric or refuses to reduce tariffs on China, Bitcoin will rally in anticipation of the monetary mandarins running the money printing press at Max Burr levels to ensure bond market volatility remains muted. He added, the next time Trump presses the tariff button, which he will do to ensure nations respect his authority, he will be able to ask for additional concessions and Bitcoin won't get crushed alongside certain equities. Bitcoin knows that the deflationary policies cannot be sustained for long given the insane levels of current and future debt the filthy financial system requires to operate, he noted. Hayes doubled down on his optimism for Bitcoin and the broader crypto market, detailing Maelstrom's aggressive investment strategy during the recent market downturn. As you can tell, I'm very bullish. At Maelstrom, we have maxed out our crypto exposure. Now it's all about buying and selling different cryptos to stack sats. The coin purchased in the largest quantity was Bitcoin during the dip from 110 to 74.5. Bitcoin will continue to lead the way as it is the direct beneficiary of more fiat dollars slashing about due to future monetary liquidity injections provided to soften the impact of a Chimerica divorce, he detailed. With global sentiment portraying Trump as recklessly using tariffs, investors holding U.S. stocks and bonds are seeking assets perceived as counter to the establishment, Hayes explained, adding, physically, that's gold, digitally, that's Bitcoin. Looking ahead, he predicted a major capital shift within crypto markets. Once Bitcoin breaches 110,000, the previous all-time high, it will likely surge, further increasing dominance. Maybe it just misses 200,000, then the rotation begins from Bitcoin into shitcoins. I like more Arthur Hayes. He's got good analysis, not crazy about the shitcoinery, but he certainly has the finger on the pulse of what's happening with the capital markets. So it's always good to hear from him. Next up, Crypto Potato. This was posted on April 26th, yesterday. A little bit more detail on something that we covered earlier, North Korean hackers setting up shell companies. North Korean hackers linked to the state's notorious Lazarus Group have successfully set up shell companies within the United States to distribute malware to cryptocurrency developers in a scheme that violates U.S. sanctions and exposes major vulnerabilities in business registration systems. How are we doing? Sanctions don't work. According to Reuters, cybersecurity firm Silent Push revealed that two companies, Block Novus LLC in New Mexico and SoftGlide LLC in New York were formed using falsified names, addresses, and documentation, which helped North Korean actors pose as legitimate employers offering jobs in the crypto industry. A third entity, Angeliper Agency, has also been linked to the campaign but has not been registered in the country. Silent Push attributed the operation to a subgroup within the Lazarus Group, a state-sponsored hacking unit operating under North Korea's Reconnaissance General Bureau. The group is known for its role in high-profile cyber thefts and espionage activities. In this campaign, the hackers used fake professional profiles and job postings to approach developers primarily on platforms such as LinkedIn, which, by the way, I hate LinkedIn. Deleted my profile. It's terrible. It's just like surveillance software gone wild. Once contact was made, victims were invited to interviews where they were encouraged to download malware disguised as hiring software or technical assessments. Block Novus was the most active entity with multiple confirmed victims. Its listed physical addresses in South Carolina was found to be an empty lot. Meanwhile, SoftGlide was registered through a Buffalo-based tax preparation service, which further complicated efforts to trace those behind the operations. The malware used included strains previously attributed to North Korean cyber units capable of data theft, remote access, and further network infiltration. The FBI has seized the Block Novus domain with a notice on its website indicating it was used to deceive job seekers and spread malware. The Lazarus Group has repeatedly exploited fake employment opportunities to deliver malware. For instance, it had launched a cyber campaign called ClickFix targeting job seekers in the centralized finance crypto sector. Cybersecurity firm Sequoia recently revealed that the group impersonates companies like Coinbase and Tether to lure marketing and business applicants into fake interviews. One of Lazarus's biggest crypto thefts came in 2021 when a bogus job offer led to the $625 million Ronin bridge hack targeting Axie Infinity. So be aware. Next up from Decrypt, a little bit more detail on something we covered earlier. Semler Scientific boosts Bitcoin stash to 314 million. As chairman says, doubters can sell the stock. The Nasdaq listed healthcare company has said it won't sell its Bitcoin even if shareholders offload their stock. Semler Scientific chairman Eric Semler made the comments one day before the company announced another Bitcoin buy on Friday morning. Medical device manufacturer Semler Scientific said Friday that it had bought another 111 Bitcoin for $10 million. The company now owns 3,303 Bitcoin worth nearly 314 million at today's price. You can sell or stop if you don't like what we've done with Bitcoin, Semler said during an interview Thursday at Bitwise's Bitcoin Standard Corporation Investor Day event in New York. He added, "We're a public company. You have that right to sell or stop. If we lose money by Bitcoin, it's not going to force us to sell." Santa Clara, California-based Semler Scientific, which trades under the ticker SMLR, first started buying Bitcoin last year with a $40 million transaction to acquire 581 Bitcoin. It has continued to scoop up the asset, copying the model of software company Strategy, formerly MicroStrategy, the largest corporate holder of Bitcoin. Strategy began buying Bitcoin in 2020 as a way to get better returns for shareholders in the face of rising inflation brought on by the COVID-19 pandemic. The company has aggressively bought Bitcoin since and now works to securitize the asset. Investors can buy shares of the firm to get exposure to Bitcoin's price. The company now owns 538,000 Bitcoin or $51 billion worth of the cryptocurrency. Other companies on the Nasdaq are following suit, such as Cosmos Health and auto firm Worksport. Semler Scientific stock is currently up nearly 3% on Friday, trading for $35.40 a share. Bitcoin is up nearly 2% on the day, cracking the $95,000 mark for the first time in 2 months. So corporations keep on stacking. Game theory playing out. Check. All right, next up from bitcoinnews.com, a little more detail on the Federal Reserve easing digital asset rules. opening doors for banks. In a big shift that could change the U.S. financial landscape, the Federal Reserve has officially taken back its guidance that told banks to stay away from digital assets. This means banks no longer need special permission to engage in Bitcoin and stablecoin activities, and the community and financial institutions are loving it. Until now, US banks had to notify the Fed if they wanted to get involved in Bitcoin, such as offering custody services and partnering with digital asset companies. That was outlined in 2022 and expanded in 2023 after the collapse of major platforms like FTX, which raised concerns about fraud, consumer risk, and financial instability. But on April 24th, 2025, the Fed pulled the plug on those rules. The Federal Reserve said in a statement, the board is rescinding its 2022 supervisory letter establishing an expectation that state member banks provide advance notification of planned or current crypto asset activities. Going forward, digital asset banking activities will be reviewed like any other financial service through the Fed's regular supervision process. This aligns with recent changes from the Federal Deposit Insurance Corporation and the Office of the Comptroller of the Currency. All three agencies have now withdrawn their 2023 joint statements that warned banks about Bitcoin companies. Those statements had previously labeled such activities as inconsistent with sound banking practices or not safe. One of the statements even said digital asset deposits were unpredictable and could result in sudden outflows. That language is now gone. This is a big change from what many in the industry called Operation Choke Point 2.0, when digital asset companies often struggled to get basic banking services because of their industry affiliation. This is a big shift in tone, signaling that the central bank is changing its direction. Bitcoin fans see this as a green light for banks to get back in the game. One of the most vocal supporters of the move was Michael Saylor, executive chairman of strategy and a well known advocate. Banks are now free to begin supporting Bitcoin, Saylor tweeted, sharing the Fed's announcement. Saylor and others believe this will drive broader adoption of the scarce digital asset by making it easier for traditional banks to offer BTC related services. The Bitcoin industry has long argued that harsh or unclear regulations were stifling innovation in the US. Many startups and exchanges have even considered moving overseas to escape what they saw as an unfriendly regulatory environment. Now, with the Fed's policy reversal, banks no longer need special approval to offer digital asset services. They just need to follow regular risk management rules like AML and CDD. This reduces compliance burdens and opens up new opportunities for bank involvement in the digital asset space. While the new guidance is more digital asset friendly, it doesn't mean banks can do whatever they want. The Fed will still be monitoring their activities through regular oversight. Although the Fed has rolled back many restrictions, they have not yet updated their policy on granting master accounts. Caitlin Long, a key license that allows banks to access the Federal Reserve's core banking services. Bitcoin-focused banks like Custodia, that's Caitlin Long's bank, and Kraken Financial are still waiting for approval. And so they will continue to wait. But it's definitely going in the right direction. And the ability, I think, probably within the next year or two, to get a Bitcoin loan at a very, very reasonable interest rate. Because right now the rates are quite high if you want to get a Bitcoin loan, because there's just not many companies that do it, and they charge an arm and a leg. And there's like very little risk, especially if you over collateralize, that you won't get paid back. So really, the interest rates on Bitcoin loans should be like 2 or 3% or something like that. But that day will come with more competition. So we'll see. Next up from Bitcoin Magazine, this is an op-ed piece from Shinobi. Bitcoin without privacy is a surveillance system. You've all had an interest in subjects related to Bitcoin. Oh, let's see. This is about Yuval Kugman. Okay. Yuval had an interest in subjects related to Bitcoin far before it was actually birthed into the world. A lifetime software developer and technology enthusiast, as well as a general purpose autist, he first became interested in cryptographic technology around 2002. His father attended a talk by Adi Shamir, the famous cryptographer who co-invented the RSA signature scheme on eCash. A father-son conversation later, and Yuval was now aware of linkable ring signatures, the double spending problem, and the concept of eCash. His journey down the rabbit hole had begun before the Bitcoin branch had even a single shovel of dirt removed. He even ran Hashcash on his mail server in early 2000s. Like many Bitcoiners at the time, including myself, Yuval saw the original Bitcoin article on Slashdot in 2010 and promptly dismissed the entire idea as silly and unworkable. Later in 2013, he realized that Bitcoin was still around, chugging along and producing a block roughly every 10 minutes, but still Yuval did not act to get more involved. Eventually, in 2015, he took advantage of an offer someone made to sell him some, and that did the trick. Actually owning some Bitcoin himself was the last nudge he needed to really go down the rabbit hole. Through the beginning of his time in this space, Yuval focused very heavily on researching different privacy coins. When asked what made privacy such an important area of focus for him, he said this: realizing my silly impulse buys or poor choice of wallet software was being recorded on chain for all to see and possibly making me an easy target if Bitcoin was going to be outlawed one day. Despite all the different approaches and potential advances of privacy coins at the time, nothing fully convinced him that they were a solution despite all the progress they'd made in different areas. Even as I realized I only really believe in Bitcoin, imposter syndrome kept me trying to learn about all the things. By that point, the rate at which new things to understand were being made up was orders of magnitude more than I could keep up with, but it took me a while to stop trying, he said about that time period. For a while, he simply lurked on Reddit and Bitcoin Twitter, soaking in what was going on, but not really participating to any degree besides researching and learning. The first community he actively participated in was an open voice chat server called Dragon's Den that he heard about on the Bitcoin podcast Block Digest. Disclosure: the author both operated the chat server and co hosted the podcast in question. Yuval was one of the designers of the Wabi Sabi protocol implemented in Wasabi Wallet 2.0. Wabi Sabi was a protocol designed to facilitate coin joins of flexible denominations as opposed to every output having to be the exact same amount. He was quick to point out that it was simply combining an aspect of confidential transactions with anonymous credentials, something Jonas Nick highlighted had been prototyped already in an eCash implementation. One important thing to make clear is that Wabi Sabi is simply the mechanism replacing blind signatures for users to interact with the coordinator and accomplish building a coin join transaction. It is not a part of how those coin join transactions are structured or look on chain. It was, however, designed specifically to allow coin join transactions to be structured with arbitrary amounts without being a point of failure that could de-anonymize users trying to create such transactions to the coordinating server. While Wasabi 2.0 did implement the Wabi Sabi protocol itself, the ZK Snacks team ignored almost the entirety of the research and work Yuval did on the structure of arbitrary amount CoinJoin transactions. He did this work in order to ensure that the transactions Wabi Sabi was coordinating were sufficiently private and did not implement behaviors or transaction structures that could undo user privacy after the fact. Where it went wrong is death by a thousand cuts, with the primary cause of that being Nopara 73 and Molnard refused to learn anything about how to avoid the same mistakes that were already made in Wasabi 1.0. Expanding on that, he said everything from coin selection to when the decisions about what output values to use to when coin joins are done and how Tor is utilized had corners cut and was implemented based on vibes with no understanding of the underlying mathematics. Even the game theoretical assumptions necessary for the denial of service concept to really work do not hold in any rigorous sense. As a specific example of general incompetence he witnessed at ZK Snacks, he said this: a related fun fact, even though for years ZK Snacks claimed they kept no logs, the unnecessary use of mostly default configuration NGINX to serve the website using the same host as the coordinator service meant that the logs were in fact being kept. He ultimately left VK Snacks due to his disapproval of the corners the company was cutting and his unwillingness to participate in that. Yuval's current opinion on Wasabi Wallet, especially given the current environment of multiple people running Wasabi 2.0 coordinators, is that no one should use a coordinator server unless they trust that server to not take advantage of implementation and protocol flaws to de-anonymize them. Privacy is a human right, but in Bitcoin, it's also a personal safety issue for more or less anyone on a long enough time horizon. Yuval's view on the current state of Bitcoin privacy is not the rosiest. He has a number of concerns with the general landscape as it stands now, specifically custodial exchanges being overzealous in their refusal to interact with users who make use of privacy tools. He sees nothing about the use of privacy tools preventing you from selectively disclosing information to an exchange when required. There's a difference between sharing your information with exchanges you trust and, by extension, regulators and broadcasting that for the entire world to see, he said. Apathy from users is another thing that concerns him. Many users do not care about their privacy, if they even consider it, and the use of privacy tools among Bitcoin users is realistically a very small thing. In some social circles, there is even a stigma around privacy. Apathy compounds the stigmatization, effectively normalizing the absence of privacy. Exchanges don't lose many customers if they refuse to serve customers that use privacy tech, he said. He isn't very happy with the current state of privacy tools either. Rent-seeking privacy wallets, snake oil peddlers have poisoned the well. Their zero-sum brainworm infestations led them to spend their time shit-slinging in Twitter feuds instead of, God forbid, opening a textbook or academic paper. This toxic discourse also alienated users, feeding into the apathy and the stigmatization. Ultimately, all of these concerns are rooted in social issues, how people or businesses act, how people react to other actions, etc. That is how they must ultimately be solved. Without sufficient user demand for privacy tech and for the normalization of its use, Bitcoin is one hell of a surveillance tool. In September 2023, Yuval was hired full-time by Spiral to work full-time on Bitcoin privacy research and development. Given that many of the issues with current CoinJoin implementations stem from their dependence on a centralized coordinator server, Yuval has decided to focus his work on decentralized CoinJoins. As such, at Spiral, he's working on decentralizing CoinJoin coordination and improving the ability to analyze and optimize multi-party transaction structures for privacy. My long-term goals are to to see through my now more developed ideas for CoinJoin. Privacy should have close to zero marginal cost, or high fees will deter its use. It should also not be a product that grifters can shill to make a quick buck by deceiving uninformed users. And finally, it should be strong and robust, primarily against intersection attacks. An intersection attack is an attack taking advantage of mixed coins being spent in the same transaction together improperly to de-anonymize their history. He is currently contributing to the Rust PageJoin library maintained by Dan Gould to work towards his ultimate goal of a decentralized CoinJoin protocol. PageJoin is currently specified as a two-party collaborative transaction construction protocol, although this only achieves the first of these two goals. Generalizing it to multiple parties provides the opportunity to do the third one properly and potentially in any wallet. Yuval thinks that covenants are a valuable improvement to the Bitcoin protocol, but thinks that the current set of covenant proposals is made out to be more impactful in the long term than they actually would be alone. The current favorites, CTV plus CSFS, seem like a significant step forward, but the way I see it wouldn't suffice for the kind of long-term scaling improvements we'd see for global adoption, even if CTV is generalized into TX hash. He is a fan of VAROPS, concept from Rusty Russell's great script restoration proposal, as a general mechanism to constrain more complicated covenants or other opcodes to prevent them from making block validation too expensive for users. I'm sad to say, I also find many of the discussions to be disappointingly tribal, with many words spent arguing in circles about why one's preferred opcode is the best hammer, because look how many problems like a particular kind of nail if you squint hard enough, and if you're such an idiot and on top of that clearly dishonest for not sharing my preferences. Overall, he thinks the conversation around covenants is poorly managed and too much focus being given to individual covenant proposals rather than considering what kinds of use cases we want to enable and which use cases we do not want to enable, and working backwards from there to design appropriate proposals to service the desired use cases. Regarding what average Bitcoiners can do to improve their own privacy or support privacy in general, he had this to say: accept that there is no magical solution. We're kind of stuck with the Bitcoin we've got as far as the transaction graph. Then critically assess what solutions are available, affordable, and safe to use them. Ultimately, privacy requires everyone to take action. So, what do people do? Lightning offers some improved degree of privacy. There is still join market and wasabi with the disclaimers from above. Do what you can, investigate the tools, verify what you can, and make sure you appropriately consider who you are trying to stay private from and how much effort it will take to do so. Even if you don't think you need privacy today, at least figure out what you could afford to use if you might need it tomorrow, so you don't get caught off guard. Also consider what the people who do really need it today can't have it without those who can live without it. So if you want to have that option tomorrow, you should exercise it today. Use it or lose it. So some wise words there on privacy. All right. Next up, wanted to feature or talk about this week's featured post in the Bitcoin Fortress Substack. That is 1 year of Bitcoin Fortress, stacking truth, slaying fiat lies. And so there's a link there in the show notes to that article. And let's take a look at what's coming up on the Bitcoin Fortress Substack in the coming weeks. Coming up Monday, Bitcoin and global liquidity. And then Wednesday, we have why do so few people understand how money works and fail to recognize it's broken? And then we'll wrap up the week on Friday with the echoes of empire. And then we've got Bitcoin market cycles, followed by Bitcoin mining and energy. And we have the best places in the world for Bitcoiners and sovereign individuals 2025. So check that out. And if you like it, please subscribe. It's free. Next up, wanted to give the fountain shout out to At God's Death with 236 sats. Thank you, sir. Good to see you again. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack at bitcoinfortress.substack.com, and you can follow me on Nostr. My inpub is in the show notes. And with that, I will talk to y'all next week. Bye bye.